Hi and welcome to today's market alert for Tuesday the 15th of February 2022. So S&P futures surge, yields jump after Lavrov proposed to Putin to continue talks with the West. And of course yesterday they were talking about they were going to invade in 48 hours. I may have covered this in the market alert, but I think it was in the 3 trades that I recorded, which I've added to the members section of the website. The other news yesterday, of course, is you cannot make this up. Markets reversed after Ukrainian leader says attack comments were irony, not real. As I mentioned in the video, either, like I say, yesterday's market alert or the 3 trades that I recorded, and I actually showed the news headline, there was 48 hours. Actually, it was the 3 trades that I covered because I was talking about the element of surprise in the market, of course, just in case they did go to war, then the market would fall out of bed. But again, like I say, you don't notify your enemy when you're about to invade. I mean, what happened to the element of surprise in an attack? So yeah, I mean, it was bonkers anyway when that was released yesterday, which is why the market shot up quite sharply. Meanwhile, inflation news, petrol and diesel prices reach record high. And the interesting thing here, of course, is that the actual price of crude oil, if we just have a quick look at this while we're here, I'll just grab the monthly charts and let me just compress the chart so you can see all of the data here. And we go back to 2008 and you can see that crude oil compared to where we are now, let me just make this blue, you can see that it was about $60 away from the all-time high. And yet we are already breaching the record high prices for fuel in 2008 by about 20%. So if we get back to this record high of $144 per barrel, fuel is going to be very, very expensive, and add to that inflation cycle that we've got, or hyperinflation, where we're already seeing that petrol and diesel is at record highs. I think it says down here that we've got, I can just zoom in, can I? Yeah, we've got 148 for petrol and 151 for diesel. That's just an average, of course, because it varies depending on whether it's motorway and also an average across the country. Meanwhile, in the gold-silver ratio, this is starting to move up. Gold up overnight, but silver down. No surprise, really. They don't want the price of silver up if they can help it. And while I'm in the web browser, let me just show you. Recorded the trades yesterday, or 3 trades. You'll find them under the tutorials once you've logged in. Click on this and then go down to here. And you can then click on live trading examples. And if you scroll all the way down to the bottom here, you will actually find the latest one. There's a lot of trading examples in here, mainly on smaller time frames, but I have got more coming with positional trades and swing trades as well. The idea was just to get up a lot of examples, because it doesn't matter what the time frame is, the trading strategy works exactly the same. So here you can have lots and lots of examples, and this is yesterday's trade, 3 trades yesterday, and that's in example 24. Okay, let's get on and have a look at the markets, and let's start off with the Dow. You can see yesterday we were down sharply, but prices coming back mid-morning, as you'll see in just a moment, but sideways overnight, still sitting at the 62% retracement. Drawn in from here back to here. So at the moment we're holding, but watch yesterday's low just in case the market starts to move to the downside. So let's have a look, see where we are in the 30-minute chart overnight. Yesterday we moved down and then they brought the market back. We can see that it's been brought back 78% there. And then it sold off again towards the close. Seems to be something that's happening with the Dow at the moment. But this is where you want to watch out for, is yesterday's low, should the market move down. Because if we take out that low, then we're heading down to these 2 areas in the daily chart. So 30 minutes sideways at the moment. We are oversold, due for a bit of a bounce back up towards the DP level, but watch out for that 50 bar moving average in the 30 minutes, which you can see how effective it's been at moving the market lower in the previous day's trading session there. In the German DAX, we've got a similar picture, except the DAX really pounded to the downside yesterday, hammered down. And again, I cover this in the 3 trades, why this was a great buying spot at 8439. I can still even remember the actual price because it was just glorious how this market traded down to this point. So we were through the 78 and the 89. We've got this double bottom in place, and we're starting to move up a bit. There may be a bit of a reprieve, but the looming Russia-Ukraine saga going on in the background isn't helping matters. It's putting a lot of downside pressure on the market at the moment. And in the 30-minute chart as well, very similar to the Dow. Again, you can see that we're oversold at the moment, trying to get back above the DP, but we're a lot further away to yesterday's low. In fact, let's just have a look at this. 100, 200 points down to the low if the market starts to head down in this direction. But this low yesterday tied in beautifully with this double bottom here. And let me just put the figure on for you so that you can see. And there it is, that 839 number. And again, if you look at the 3 trades from yesterday, you'll see how this was used in order to catch the trade on the way back after the market sold off from the open. If we have a look at the 5-minute charts for yesterday, it's just drag the chart over to the left so you can see what happened at the start. The market came back and hit the 89. We had a crossover, we were overbought, we had some divergence, and the market then closed below, dropped down a couple of 100 points, and then traded sideways to higher. And again, in the examples, I'll show you how this was traded back. And then out of the blue, when Lavrov said, "Oh, I was only kidding," the market just kept screaming back out of nowhere. And this is a problem that we have, or a potential problem we have, because if they do go to war, you're going to see the opposite of this, where the market will be sold off very sharply, very quickly, and it will be a lot more dramatic than the move to the upside as well. It takes a lot to push the markets up. It takes nothing to send them south. So there's always a concern over the next few days with the Russia-Ukraine situation that they could slam the market. It's okay if you're short, but if you're not and you happen to be long, then it could be a bit tricky, to say the least. But you can see how the market just traded sideways after these comments. When I'm sideways, though, I mean, it's still a good range and lots of volatility, but this is a bit messy in a 5-minute chart, but a great trading range and scalping one in a 1 and 2 minute time frame during this, because you've got the defined range. It didn't take long to actually define the range either, and if you use fibs, you'll soon pick this up as well. Plus we became oversold in this area, but we didn't really move back to overbought until we made the back to 89% there. And then of course overnight the market has dropped. A big shakeout here. This kicked off at let's have a look. Oh, actually, sorry, this is last night when the Dow was still trading. Of course, this is where we start the new session. So when the Dow moved low, which we saw in the 30-minute, again, that pattern that seems to be evolving, then the plunge protection team obviously stepped in. And at the moment, you can see we're just trying to hug and stay with the DP level at the moment. Quick look at the metals. Let's find this for you. Silver at the moment is being hammered to the downside after moving higher on the overnight. We'll look at this in a bit more detail. Trading down to the DP, 50 bar moving average as well. So you can see there in the last hour they've managed to hit the price of silver. In the daily chart you can see this starting to unfold as well. So we need to stay above the 5 bar moving average if prices are moved lower. So just a quick recap there. We want to keep yesterday's low intact as well to keep this market moving to the upside. And yesterday's high is also important as well, where we're just staying above that at the moment. Meanwhile, gold is moving to the upside, which is why it's having the adverse effect on the gold-silver ratio. Just go back to that. That's why you're seeing the silver move to the upside, because gold isn't moving except to the upside, whereas silver is being moved down at the moment. That's the banks as usual. And then in the dollar, sideways up yesterday, and silver still managed to go up despite the dollar moving higher as well. But then again, that's the war drums that are supporting the US dollar at the moment. As soon as that's either decided one way or the other, we will see the dollar moving to the downside. And once it starts, we'll start to see this sort of action once more as it continues to make lows. It's just a bit of a dead cat bounce in the US dollar at the moment. And then crude oil again up again yesterday, putting in another new recent high at $96.74, which is why you're seeing the fuel prices continue to move. This is going to impact on inflation massively, and we get our figures this week, don't we? I think they come out on wherever they've gone. They seem to have disappeared. Let me just grab that for you. Let's have a look. For today, we've got the German news. I'm just looking. So this is the main event there, the PPI for the US. But I think it's it's tomorrow. Tomorrow morning. I mean, what an utter joke. 5.4%. Fuel prices are already massively higher than they were last year. That has the knock-on effect, as I've just said, all the way through transportation, through to food prices, etc. But like I say, when you put in lip gloss and disposable cameras into the calculation, what do you expect? It's just a smoke and mirrors exercise. And just before I finish, let's have a quick look at the yen and the pound charts as well. More markets coming on stream. And we'll start off with the pound again, the background of the markets. We had a sell-off recently, and now we've had the double top and a bit of bearishness there over the last few days. But you can see the markets actually come back from here to bang on 89%, and also the 50 bar moving average, plus the support to the left there as well. So again, when you start to look at the background of the market, you can spot these opportunities. If you're aware of these and you do the planning right, you spend some time looking at the daily charts, marking up these areas, looking at the momentum, where it currently is, then you can actually take a view and then use the smaller time frames like a 30-minute to actually buy back into these markets. And if you prefer smaller time frames, you can use these as well. But with the currencies, I tried to trade nothing less than 15 minutes because of how slow some of them actually move, particularly the euro. The yen, of course, different ball game, but a beautiful picture here as well, where the market has been moving up nicely in the daily chart, retraced down to the 200 MA, no surprise there, and then the market coming up and doing that double top there as well at the 157 level, and then prices moving lower. So what I would do in this situation is where we've got the resistance at this price, you'll be looking inside of a 30-minute to see where there was some selling coming into the market, and there it is, and then it's south, and you can see we're overbought and divergence, etc., crossover in stochastics, and we see some selling coming into the market as well before prices move lower. And at the moment we're finding a bit of support, and the reason for that is, again, we've come back to the 89% retracement yesterday, and that saw prices move off again, overbought, crossover in stochastics, a bit of selling there that disappeared, BRN, reversal, and then we get the market moving back up to the close. So that's why we've got the alerts in here, so that you can be alerted. You don't have to sit there and watch, but it's like any business, you've got to do the planning, look at the market, see where they are, know the background of the market. And again, you'll see this in yesterday's German DAX trade, why I used the the 839 and was able to use that to actually have minimum risk and trade back. And it's the same in all of these markets. It doesn't matter what the market is, however you trade it, you can, as long as you start with the daily chart or bigger time frames, know that background, know where all of these areas are, then you will have no problem in fine tuning and optimizing those entry points. Okay, that will do it for this one. If there is anything else to report today, I'll let you know. But as ever, thanks for watching, and see you in the next one.